Good day, students. Once again, I will be recording this question, which is question 7, by the name NITE PTY LTD. And I always prefer to start reading what is required. Then after reading the requirements, I go and analyze the question. My main focus has been always on the calculation, not much on the theory. It says calculate the labor rate variance in total for the company, 3 marks. Then after we are to calculate the idle time variance, and it should be split to per product type, meaning we have more than one product that we have. Then take note, they say idle time variance, and I will be focusing on the idle time, not on the productive time. However, you can also record this by using the productive time. Then we are to calculate the labor efficiency variance, which is obviously looking at the number of labor hours, standard hours, vice versa, the actual hours. Then number D mentioned what a possible reason for the variance in A could be, assuming that the standard provided are correct. So now we have to explain the possible reason for the above variance. Just one theory mark. Assume an adverse total labor efficiency variance. Mention possible reasons for this, assuming that the standards provided are correct. So that's another 1 mark of the theory. I will just paraphrase that, but not be spending time on the 1 mark theory. Calculate the sales mix variance. Use the contribution per unit in your calculations. So now, and the sales value per unit, we are to calculate the sales mix. Then after, we are to mention what a possible reason for the sales mix variance could be, assuming that the standard information provided is correct, and briefly explain why using currently attainable cost standards will provide management of BRITE with more meaningful information than using the ideal cost standard. As I said, that I'll be mainly focusing on the calculation part, because that is where students mostly request me to do videos. So I will be mostly on that question, second question, third, and also calculating the sales mix variance. I'll just bypass some of the theory questions, and I know that students also do have the solution to this. So in terms of theory, you can just go and read it. Now, if you perhaps need the question, you can request the question with the solution via the comments on my YouTube channel. Now it says the BRITE PTY LTD manufactures a single bulb, or manufactures light bulbs, in fact not single. The company uses a variable or direct costing system and has 2 products, and their 2 products are the extra bright and the energy saver light bulbs. No inventory is kept, so production volumes equal to the sales volume, and this simplifies our life, meaning there is no opening inventory and there is no closing inventory. Therefore, now demand is constant. Whatever we produce gets to be sold within the given period. The following information represent an extract from the company's records for the month of August in the year 2014. And we are given the standard productive time per extra bulb, light bulb, 5 minutes, meaning it takes 5 minutes to complete the extra light bulb, and it takes 9 minutes to complete the energy saver light bulb. Remember, they have 2 products. So now they are giving us the standard time, which is in minutes in this case. Remember, when we are given such, when we do calculations, we'll have to divide this by 60 and divide this by 60. and we get our time converted into hours, but you can still operate with the number of minutes, but everything has to be now converted into minutes. Hence preferable convert your time into hours. Then we are given the standard clock hours, which is 30 rand per hour, meaning employees are being paid 30 rand per hour. Even if they are doing the extra bulb or the energy saver, they are being paid the same amount. Remember, in some instances, the labor rate might differ with the product that the company is producing. So some employees might get paid higher because of the special skills that they have, or the special skills that is needed for them to produce a specific product. But in this case, all the employees are being paid 30 rand. Either they produce the energy saver or they produce the extra light bulb. Then after, we are given the standard idle time provision, meaning it is expected that 15% of the clock hour or of the time will be idling, where employees might be moving up and down between maybe the production department or between the process of production. So 15 minutes or 15% is expected to be an idle time or an unproductive time. Then after, we are given the actual information. Under actual information, which is labor information, they say the total labor cost for the month is 827,200. Remember that when they say total labor cost, they are referring to the labor cost to manufacture both the extra bright bulb and the energy saver light bulb. So now it is for both of them total labor cost. Therefore, now that means we will need to know how much is the labor rate per hour that was actually paid to our employees, because we budgeted that our employees will be paid 30 rand per hour. Then the question is, did they get paid the same 30 rand when they did the actual production in the month of August? That we are not sure yet. So now they give us the total productive hours worked, of which 725 of the total, remember now they are referring to that total, that is the total, of each out of that total 23,265 hours, 7,425 is for extra bright. So now for extra bright, we had 7,425 productive hours. Therefore, now we need to know how much is the energy saver productive total actual hours. So now I have to just do the deduction between the two figures so that I get the actual productive hours that were spent to complete the units that I am not sure of as per yet for the energy saver bulb. 23,265 minus 7,425 gives me a total of 15,840 hours that were actually productive with regards to the energy saver bulb. Just repeat that: 23,265 minus 7,425. That gives us 15,840 actual productive hours for the energy saver light bulb. So now we come to the other hours. They say the total idle hours. Remember, these are the actual idle hours. And we know that it was expected that idle hours should be 15% of the total clock time. But now they don't give us the percentage, they give us the actual idle time. Then after, we say now it's 825 where for the extra bright, and the total of the hours is 2,585. So we need to know how much hours we're idling for the energy saver bulb, which is also a light bulb. Then we say 2,585 minus 825. That will be 17,000 or 1,760. So now we need to structure our hours into a very good manner. Therefore, now we need to say actual hours when we are calculating actual hours for both of the bulbs that we have, so that everything is structured well. So now we have the two products that we have, the extra bright. We have extra bright, and extra bright will be the total of the productive and the idle time hours. Remember, extra bright had productive 7,425 and extra bright had 825 idle time. So that becomes the total hours for this product. So now we need the two of them, 7,425, which is the productive, plus 825, which is the idle time. So now we have 825, which is our idle time. So the total of the two will give us the total hours for our extra bright light bulb. Then now we have to add the two, 7,425 plus 825. This will give us 8,250 total hours for extra bright. 8,250 total hours. These are the total actual hours. Then after now we need the one for the energy saver. Energy saver, the one that saves energy. The one that saves energy, we said that total actual hours will be 15,840, which is productive hours plus 1,760. Therefore, now the sum of the two will be the total productive time. Then while I'm still minimizing this, then this will give us 15,840 plus 1,760. That will be 17,600. So now we have 17,600 total actual hours for the energy saver light bulb. So now we do have our hours, and just want to bring this across that this is productive, this is the idle hours. I'm just using the abbreviation also to minimize space. And remember, these are the actual hours for these two products. Therefore, now we have that information sorted out. Then now remember, we're given the total cost of labor, and we know that the sum of the two are the total hours, both productive and idle time hours. So now I need to know how much is my total hours so that I get to the actual labor rate that was paid to the employees during the month of August 2014. So now 23,000 are the total productive hours for both of the product. Take note of that. Of which these total hours were divided into 7,425 for extra bright, and another one, remember, was 15,840 for the energy saver. Those were the total productive hours for the two products. Therefore, now that is why now we have to add the two and say 23,265 plus the idle time once again. Our idle time, remember, this was idle time. Total idle time was 2,585, and 825 of that 2,000 was for the extra bright, and 1,760 was for the energy saver, and the total of the idle time is 2,525. So now with that, let me add the two and say plus 2,585, and this gives a total of 25,850, the total hours. Let me just recalculate that. 23,265 plus 2,585. This is 25,850. This is the total hours. Therefore, now we say 827,200, which is the total labor cost. Divide this by 25,000 hours, 850. This gives us 32 rand. meaning now our actual labor rate will be 32 rand. Therefore, now we calculate our actual labor rate as it was not given. Our actual labor rate will be 827,200. Divide this by 25,850. Divide this by 25,850, and this gives us 32 rand per hour. 32 rand per hour. So now that will be our actual rate of labor. Remember, the standard rate of labor was given to us as 32 rand, and we can see that now there's a variance already between the two. We paid our employees a higher rate than before. Obviously, this could be because of the union labor rate negotiations that would have led to us to pay our employees higher than what we anticipated. Then now let us go to the next part of the information, and they say the company rounds off productive hours rate to 2 decimal places. So now we have to round off the productive hours to 2 decimal places. I might consider that depending to how my figures are, but at the end of the day everything will be okay, but the 2 decimal becomes also crucial. Then we are given the budgeted sales for the month. Now remember, this is budgeted information, and normally this information is normally after the standard information, but they preferred to give it to us after the actual labor hours. Some questions, they will have separate standard information together with the budget information, but now we have this budgeted sales that were given for the month. Our sales value, take note, not sales in terms of units. Extra Bright had sales revenue of 3,600,000 rands, of which the selling price was 30 rand. And if we divide this by 30 rand, meaning 3,600,000 rands, divide that by 30 rand, it will give us the number of units that were sold. Then we say 3,600,000, divide this by 30, it gives us 120,000 units, meaning they sold 120,000 units at 30 rand to get the revenue of 3,600,000 rands. Then after, for the second one is 4,050,000, and the selling price was 45 rand. And if we divide by 45 rand, that will give us a total of 90,000 units that were sold at 45 rand. That ended up to an amount of 4,050,000 rands of the sales revenue. Then after, they give us the standard contribution percentage, and our contribution percentage is 70%. So now if this is, sorry, it is 30%. I'm just thinking now from the other point of view. It is 30%, meaning 70% is variable cost. In other words, variable cost is equal to 70%. Therefore, the contribution will be 30%. So they have given us the contribution, not the variable cost. But I'm not going to be explaining that more in details. I might confuse you on that. So now that means when we say sales minus variable cost, we get to the contribution, and the contribution is 30% of sales. Therefore, now that means if we say 30 rand, multiply that by 0.3, it will give us 9 rand, meaning our contribution is 9 rand. Therefore, now that means the selling price of 30 rand minus 21 rand of the variable cost will give us 9 rand, meaning our variable cost are 9 rand. Therefore, now if we minus the variable cost at 21 rand, and if we minus the variable cost, we get the contribution of 9 rand, which is 30% of our sales. So now that will be our 9 rand, sorry, by that 90 rand. And again, now we will have to say our selling price of 45 rand, multiply this by 60%, and this gives us 27 rands. That will be our contribution. Now, if we have 27 rands, we say 27 minus 45, meaning our variable cost are 18 rand. Therefore, now we know that to calculate the contribution per unit, we say selling price of 45 rand per unit minus variable cost of 18 rand for us to get to 27. Therefore, 47 minus 18 will give us 27. So now I'm just bringing you back to how we normally calculate the contribution. Is the selling price minus the variable cost is equal to contribution of 27. So this is 27 is given in that nature. So that's why now they only give us the percentage, but most of the times they don't give us the percentage. They'll give us the selling price per unit and the variable cost per unit for us to calculate the contribution, which in this case is given as the percentage. It makes life easier for us. Now, let us proceed to the actual sales. Now they come back again to the actual information regarding our sales. Our actual sales were 3,520,000. The number of units that were sold were those ones. And our actual sales were 4,356,000, and the number of units given to us were the 88,000 hours. Now, if you want to know the selling price, remember per unit. There is no hassle, very easy. We just divide to get the per unit. 3,520,000 of our sales, divide this by 110,000. This will give us 32 rand, meaning we sold our inventory at a higher price than we budgeted. Then 4,356,000 rands, we divide this by 88,000. This will give us the selling price as 49 rand 50 cents. So now we have that 49 rand 50 cents, meaning we sold again our inventory at a higher price than we budgeted to do so. So now that is also a good thing for us, because we are getting more revenue than we anticipated per unit. Then now this was the analysis of the information provided to us. Then now let me go to in response to the question now. We are now required to calculate the labor rate variance in total for the company. Remember, we have two products, so now we need to take into account both of the products that we have. And we know that when we are calculating the labor variance, we say standard hours minus actual hours. So actual hours, standard rate minus standard actual rate. We are looking at the rates. Therefore, now we look at how much was the standard rate, and we have calculated that the rate we were given that the rate was 30 rand. We expected to pay our employees an amount of 30 rand. And we discovered that we actually paid our employees a total of 32 rand. So now we paid our employees higher than what we anticipated. So now our labor rate will be the standard rate minus the actual rate. So now let us go in calculation of that rate for both of the products that we have in our disposal. So now we calculate our labor rate variance. Our labor rate will be standard rate minus actual rate. Multiply this by actual hours. Now I am doing this abbreviation because I'm normally used to this abbreviation. You can write the full description, but I just use the abbreviation to say standard rate minus actual rate term this by actual hours. Or you can say standard actual rate minus standard rate. It doesn't matter, as long as you know when is the variance favorable or when is it unfavorable. We have two products, which is extra bright. We need to write both of them. We have extra bright and we have energy saver. And our extra bright standard, remember we said all employees were being paid the same rate, 30 rand. And our actual rate was 32 rand. And remember, all employees were being paid the same rate. In the case where the rate is not the same, please make sure that you write both of the rates. We have actual rate here. Then now we need to multiply with the actual hours. We need to multiply with the actual hours, standard minus actual times by the actual hours. We need to check how much is our total actual hours. Our actual hours for the extra bright, we calculated them to be 8,250 hours. So now we need to multiply that by 8,250 hours. So now the last column will be the column of the total, because we need the total of this variance. And now we multiply here by the total hours of 17,600 hours that we calculated previously. 17,600 hours. Now we say 30 minus 32. 30 minus 32, multiply this by 8,250. This gives us a total of 16,500. This is in the range 16,500. And this will be adverse variance. Then also the second one will be adverse. 30 minus 32 becomes 2. Multiply this by 17,600 hours. And this gives us the total of 35,200. And also this variance is adverse, meaning unfavorable, because we paid our employees higher than what we anticipated. So now the net of the two will still be unfavorable. Plus 16,500. Therefore now this gives us a total of 51,700. And the variance still remains adverse. So now this will be the total variance with regards to labor, unfavorable variance. Then now that was in response to the first requirement, which was requirement A. Then now we go to requirement number B. Requirement number B, we are required now to calculate the idle time variance. Calculate the idle time variance. Now in calculation of the idle time variance, still very similar to what we have done. It is still standard, but now we are focusing on the hours. Let me write now in details. Standard idle hours. Standard idle hours. Vice versa, actual idle hours. Then after we have to multiply this by the standard hours or a standard rate per productive hour. Then we multiply this by the standard rate per productive hour. I will explain this. Per productive hour. Per productive hour. I want to make sure that at least I write everything. Now, when we do this calculation, remember we are looking at the standard idle hours, vice versa, the actual idle hours. Then we multiply this by the standard rate per productive hour. Then now, let me use abbreviation because this will consume more space for me, but that is what you'll be writing. We have standard idle hours, vice versa, actual idle hours. Multiply this by the standard productive rate. The standard productive rate. So now we have two products. Don't forget extra, BRITE, and energy saver. Energy saver. Now we look at the standard, and we know that standard information is always connected with the actual information. Now we are looking at the standard idle hours. How many hours were our employees supposed to idle? Then now we have to base that on the actual time that they worked. Now let us go and look at our standard idle hours. Now we had our actual hours, remember, for each of the products. Our actual hours for the first product, we know that it was calculated to be the sum of 8,250. And we know that standard information is the standard hours will be standard idle time times by the actual productive actual hours. So now we are looking for the standard idle time. We are looking for the standard idle time, and our standard idle time will be equal to hours that were worked, actual hours times by the idle time. It will be actual hours times this by the idle time percentage. We know that the idle time percentage was 15%. So now we say, how many hours did our employee worked? Our employees for the first product, they worked 8,250 hours, and they were supposed to idle 15% of that time. That's why to say they worked 8,250 hours, and they were supposed to idle 15% of the time that they worked. So now let us determine how much is the hour that they were supposed to be idling, which we call that idle time standard hours. 8,250 multiply this by 0.15, we discover that 1,237.50 are the hour that our employees were supposed to be idling for the product called extra bright. So now we say, okay, it is 1,237.50. Then now we go and compare the hours that they were supposed to idle. Remember, this standard hours is the hours they were supposed to idle. But let us check how much or how many hours did they actually idle with regards to the product extra bright. Now that information, I think it was given to us. Let us check how many hours did they actually idle. And now we are going to the actual information. And under our actual information regarding labor, because we are looking at the labor hours in this case, our employees, they were idling how many hours? 800. Remember, we are only in the product extra bright, and we are under the total idle hours. And with regards to product extra bright, employees idled how many? They idled 825 hours, and they were supposed to idle 1,237.50 that we have just calculated, 1,237.50. These are the hours they're supposed to have idled, but they only idled a total of 850. So now that means at least it was good, because there was less idle time than what actually took place. So now if that is the case, it means we have to then now go and we record our standard vice versa actual, and we multiply that by the standard worked productive hours per product, or standard hours per productive hour. So now our standard, we said, is 1,237.50, and our actual, it was 825. Therefore now we say this minus this amount, we multiply this by the standard productive rate. And remember, the standard productive rate is 30 rand, and we multiply, or we divide that 30 rand by 85%, because we are looking only at the productive time. We are looking at the productive time when we do the idle variance. We are looking only at the productive time. Then now looking at the productive time, we know that our employees were only productive 85% of the time because 15% was idle. So now if that is the case, we need to determine how much is our productive labor rate per hour. 30 divide this by 0.85, it gives us 35.29. So now meaning the rate that we multiply with is 35.29, which is the productive rate that we multiply with. Please take note, when it comes to this, the idle variance and the efficiency variance, we are looking at the productive labor rate per hour. And remember, our employees, they are being paid 30 rand, and 15% is idle time and 85% is productive time. So now we want to know how much are our employees being paid when they are productive. So now hence we multiply that by the productive rate. So now that is why we always have to say the standard rate, divide this by 0.85 in this case, which is the productive hours. 85% of the time our employees are productive. So now that will be our rate, and it's 35.29 that we multiply with. So we multiply this by 35.29. So now let us extract the difference between the two. We have 1237.50 minus 825 is 412.25. Multiply this by 35.29. We get 14,000. We get 14,557.13. So now this will be our idle time variance. And remember, this variance is favorable. And the reason why this variance is favorable, there is my F visible. The reason why this variance is favorable is because we have spent less time idling than it was expected. So now this will be the total column. Apologies for my writing. My writing has never been good. Now that will be the reason why the variance is favorable. Just more clarity again on that. Why is it favorable? It's not about the sign. It's about you understanding the concept behind. Actually, our employees idled 825 hours for the production of extra BRITE, but they were expected to idle how many hours? 1,237.50, which we know how that was calculated. We said 8,250, which was the total hours. 15% of that was standard idle time, and it came up to, meaning they're supposed to have idled these hours or less. Therefore now they idled less than that. Therefore now that means at least our employees were more productive this time around. So now the variance becomes favorable to our company. So now that is where this was coming from. Then let me erase this part so that I can calculate another idle time or standard hours for the next product. The next product, remember, we have total hours of 17,600 and percentage expected for them to idle is 15%. So now we need to know if 15%, did they over idle or under idle? 17,600 multiply this by 0.15 is 2,640. 2,640 is the standard idle time. 2,640. These are the hours that the employees were supposed to idle when they are producing the energy saver bulb. The 2,000 is definitely not correct, not at all. From 17,600, it cannot be 17,600 multiply this by 15%. Okay, that is correct. 2,640. Just wanted to confirm. So now these are the hours that they were expected to idle when they are producing the energy saver product. Now let us check in actual fact, did they idle more or less than what was expected? Now let's go and check on that. We know that our idle time is there. Total is 2,525 and 825 of that amount is for the extra bright. So we just need to say minus 825 there in order for us to get the rest of the idle time actually incurred for product energy saver. 2,585 minus 825, we see that 1,760 are the actual hours that were idled or actually spent idling producing the energy saver light bulb. And our employees were expected to spend 2,640. How many hours they used? 1,000. So now they still idle less than it was supposed to be. Therefore, now this variance again will be a favorable variance. We have good employees. They make sure that they minimize their time moving up and down and not being productive. So now we have actual 1,760. Our actual, it is 1,760. We have 2,640. Just confirm that. Yes, 2,640. Multiply this by our productive hours, a productive rate per hour, which is 35 Rand 29 cents. Then now our favorable variance will appear there. 1,760 minus 2,640. That will be 880. Multiply this by 35.29. 35.29. I get 31,055 Rand 20 cents. 31,055 Rand 20 cents. And this variance is favorable. Then the total of them will obviously be favorable. Then after we add the two, 14,557.13, then it's 45,000. It is 45,612.33. So now this will be our number B answer. Then after we go to the next one, I just want to bring this across again as point of emphasis. This rate must be calculated somewhere. You must show the workings of that amount as I did show them before, that it is 30 divided by 0.85, dividing that by the productive hours to get to the productive labor rate. Because the 30 Rand that is paid, part of what is paid, employees 15% of their time are idling. So now we remove the idle percentage. We only focus on how much our employees being paid when they are productive, not when they are idling. Now that will be number B. Then after we go to number C. Number C, we are required to calculate again, I think so, to calculate the labor efficiency variance split per product, almost at the finishing stage, because we only have the sales mix to do. Then after we are done with this question. Now labor efficiency, we are looking at the standard hours minus the actual hours. Then we multiply that by the productive labor rate per hour. So now we know that it will be standard hours minus actual hours. Multiply this by the standard productive rate. Standard productive rate, SPR. Please do write all the details. I'm just minimizing space so that I can have time to explain to you most of the stuff. Remember, once again, we have two products and we are looking for this rate, for this efficiency variance. This was the efficiency variance. I think I forgot to write the previous one. This was the idle time variance. The idle time variance. And if you take note of what I'm doing with regards to the idle time variance, I focused on the idle time. I did not focus on the productive time. And some questions, they will be doing this from the productive point of view. So now, even if you look at the productive point of view, you still get to the same figures. But I decided to focus on the idle time because people sometimes get to be confused when we do it from the productive time instead of the idle time. So I've done this variance using the idle time figures in terms of hours. Now we are doing the efficiency, which is the labor efficiency variance. Labor efficiency variance. Then now we look at the standard hours, vice versa actual hours. And we multiply that by the standard productive rate. We definitely should be knowing that our total actual hours were 8,250 for the extra bright. Remember, we are looking at all the hours in this case. The total hours that were actually incurred. Then now this is number C. We are looking at the efficiency variance. Let me just go and analyze the information provided once again. And we look at our actual productive hours. Now idle is no longer in the place. We are looking at the productive hours. How efficient were our employees, or how productive were our employees? Now we have a total of the productive hours 7,425. Then we said the difference was 15,840, the productive hours for the energy saver. But productive hours for the extra bright was 7,425. So now these are the actual hours that I want to begin with. Extra bright, it was 7,425. 7,000, confirm that, 7,425. And another one, actual hours, was 15,840 hours that were actual productive hours. Efficiency is how efficient were our employees in the production. Remember, this will be 23,265 minus 7,425. And this gave us 15,814 productive hours to produce product energy saver. Then now we need to calculate our standard hours. Now in the calculation of the standard hours, remember, standard hours will be the standard hours per unit times this by actual production. Let me bring this, erase this. Standard hours is equal to actual production. Multiply this by standard hours per unit. Now we know that actual production was 100 and something thousand units that were actually manufactured. Actual sales, remember, they told us that there is no closing inventory. I want to remind you of that. No inventory is kept, so production volume equals sales volume. So whatever we sell is what was produced. So now this is our actual production, which is equal to our sales. Therefore, now we multiply that by the standard hours per unit. And our standard hours per unit is 5 minutes. Take note. Therefore, now we need to say times this by 5/60 so that it becomes in hours. So now when we do that, let me show it here. For the extra bright will be 5 minutes over 60. Let me check if the first product is extra bright so that I don't write the wrong figures. Yes, 5 minutes is for the extra brights, or extra bright, times this by 110,000 units that were manufactured and sold. So now that will be multiplying that by 110. Extra bright production 110,000. Whatever was produced was all sold. So now we are on that note. Then we will get to the hours that are standard hours. So now we have 5 over 60, which is 5 minutes over 60 minutes in an hour. It gave us hours 0.08333 hours. Multiply this by 110,000 hours. It's 9,167, if we may do so, or 1,966.67, or 0.66 in fact. So now we have that as our standard rate, 9,160. Where's my calculator? 9,166.66. That will be our standard hours for the extra bright. Then we need the standard hours for the energy saver light bulb, which is the same thing, nothing changes. Standard hours is always actual production times by the standard hours per unit. And our standard hours per unit, I think it was 9 minutes for the energy saver. So now we are under the energy saver. 9 hours over 60 minutes, multiply this by 88,000. Yes, 88,000 units that were manufactured. Actual production was 88,000. Then now we do that, we divide, we multiply this by actual production, 88,000. Then let us show those calculations. 9 over 60, it is 0.15 hours. Multiply that by 88,000 units that were manufactured, then we get to 13,200 hours as standard hours for our product energy saver. 13,200 straight. There was no issue of rounding off. Thank you for that. We also multiply the efficiency variance by the productive labor rate, which is a standard productive labor rate, and that is 35.29. Multiply this by 35.29. 35.29. Then after this will give us the total column. It will give us the total column, and in the total column we then now will be saying minus 15,840. Multiply this by 35.29. It gets to 93,165.60. 93,000. Oh, that is the second product that I started with, 93,165.60. So that will be the variance, and that variance is adverse variance. Sorry, there's very much limited space there. The variance will be an adverse variance. Now our employees were supposed, let me come and explain why that is adverse variance. Remember, our employees' standard hours is what was supposed to have taken place. I want to highlight that standard hours or standard rate is what was supposed to have taken place. Now, if we have standard hours, meaning the hours that our employees were supposed to have been productive, were supposed to have spent, but now they have spent 15,840 hours productive, meaning they were not very efficient, because they spent more hours than it was supposed to be. They should have spent 13,200 hours being productive, but they spent more time. And if they spent more time, You say that because there were many units that they were manufacturing than it was anticipated, but that is not right because they spent more hours being efficient than they were supposed to have been. So now for the second one, it will be again 9,166.66 minus 7,425, and we multiply this by 35.29, and that will give us a total of 61,463.18. Now this variance will be favorable because employees were supposed to have spent 9,000 effective time or efficient time, and they spent less than that being efficient. So that will be good for the company. Net of the two variance will be favorable variance. It will be I adverse because the bigger one is adverse variance. So it will be 93,165.60 minus 61,463.18. So there will be 31,702.42, and this will be adverse total variance with regards to labor. Standard hours minus actual hours times by the standard productive rate. Very easy variance once again to grab marks from. Now that will be the second variance. Then we go now to just bypass the theory part of the questions. Then let us check what are the theory part of the question. I'll just brief you on that. It's not a major thing to write. It says mention what a possible reason for a variance could be in A, using or assuming that the standards provided are correct. So that means labor was more expensive than expected, and there may have been unexpected salary or wage increase due to examples of labor union negotiations. That is the main reason, meaning we paid our employees higher than what we anticipated. Remember, standard was 30, actual was 32, so we paid our employees more than what we anticipated. And the reason why could be the negotiations of salary by the labor unions. That will be the reason that is can lead to. Or incorrect recording of wage recording. Maybe we might have recorded the labor incorrectly. That is also possible. Then number E is saying that we should assume that an adverse labor efficient variance mention a possible reason for this, assuming that the standard provided information is also correct. Now the workers, it means they took longer than required to produce the products, and that's exactly what I said. They took longer to produce the product. They were not efficient. They're supposed to have spent less hours, but they spent longer. That will be the reason why the variance will be unfavorable. Or perhaps it could be the quality of the material that was used. Maybe the material was inferior to those that were used in the past. That could also be the reason why the variance will be unfavorable. So that will be leading to the unfavorable labor efficiency variance. Number F, possibly the last part of the question, and we are required now to calculate the sales mix variance. Use contribution per unit in your calculations and not the sales value. And thank you that they are reminding us of this. Not all the time they remind us of this. You must know that we always use the contribution, the 9 Rand and the 27 Rand, which was the selling price minus variable cost. That gave us the 9 Rand. And I said our variable cost at 21, 30 minus 21, but they did not tell us that. In other case, they can give you and tell you that variable cost are this, and this. Then after you deduct them in order for you to get to the standard contribution amount. Then after now we go to the next part, which is our sales mix variance. Then now that will be CDE. Then we are in F, the sales mix variance. Sales mix variance. And our sales mix variance, we focusing on sales, actual sales first. We start with the actual sales. Vice versa, actual sales portion according to the budgeted units. Then this one is very long to write, but I'll still write it. Is actual sales in budgeted proportion. In budgeted proportion. In budgeted proportion. And I like the way they are writing proportion because they make it very clear for you. Is actual sales in budgeted proportion. Now, what do they mean by actual sales in budgeted proportion? I'll just write an abbreviation for space purpose. Actual sales in budgeted proportion, just an abbreviation. Actual sales in budgeted proportion. But please do write everything. Let us start with the actual sales, which is 110,000 and 88,000. These are the actual sales that we have. We minus the actual sales according to the budgeted proportion. Now remember, we still have two products, which is energy saver, which is extra bright first and energy saver. Extra bright and energy saver. Our total is 110 something thousand. 110 plus 88, it is 198,000. Now remember, this is actual sales in budgeted proportion. Therefore, now meaning we need to allocate according to the budgeted proportion. How do we do that? We say now, okay, for product extra bright has a total of 120,000 units, and we have energy saver at a total of 90,000 units. I hope I am not mistaken. Let us go and verify that. Yes, we had a total sales of 90 and 120,000. Remember, we calculated that. So that is where these figures are coming from. So now, if you say 120 plus 90, how much are we going to get out of the two figures? We had 120 plus 90,000. It is 210,000. So now we have 210,000. Then how do we do this actual sales at budgeted proportion? We allocate the sales units for the extra by saying 120,000. Divide this by the total of the budgeted sales. Budgeted sales in total is 210 for the two products. And we multiply this by the total of 198,000 sales for the actual units that were produced and sold. Our actual sales total was this. So now we take this, we apportion according to the budgeted information, of which our budget for the first product was 120, second one 90,000. So now we apportion this according to the percentage of the two, which the sum of the two is 210,000 units. So now that is exactly what I am doing. Apportioning the actual sales according to the budgeted units, meaning budgeted units becomes the base to allocate our actual sales in simple terms. Budgeted units becomes the base to allocate our actual sales. That's why now you see me in my calculations being saying 120,000 divided by 210,000. Multiply this by 198,000 units. and this gives me 113,142. Then now we can leave that at 142. It should be 143, rounding off to the whole unit. Now that is how I've accounted for that. So that is where the 113,143 is coming from. Then now for the energy saver is the same thing. We say how many units were budgeted is 90,000 units. How much the total units for all the products, 210,000 was budgeted. That is the 210,000. We multiply this by 198,000 units. So now when we do that, it will give us now the actual sales in budgeted proportion. Therefore now that will be 90,000 divided by 210,000, multiply this by 198,000. That will be 84,857. 84,857. Let me just confirm that. 90,000 divided by 210,000. Yes, multiply this by 198,000. That will be a total of 84,857 units. So now this becomes our actual sales volume in budgeted proportion. Then after now we multiply this by the contribution. We multiply here by 9 and we multiply here by 27. I think it was 27. Let us confirm if the contribution was 27. Yes, it was the 27. Selling price minus variable cost per unit gives us contribution. So now with that being multiplied, I have very much limited space there, just to say 27. Then now we will need the total column. We will need the total column for the two variants. So now we have 110,000 minus 113,143. Multiply that by 9. We get to 28,287. 28,287. Then after we come to the next one, which is 88,000 minus 84,857. Then first equals, multiply that by 27. 84,861. 84,861. First one is unfavorable variance or adverse variance. Adverse variance. Just undo that. Adverse variance. Second one is a favorable variance. Now this will be how we have calculated. Now once again, brief explanation. This is how many units were supposed to have been produced and sold, but we produced and sold 110. That becomes unfavorable for us, because remember, sales bring income. We are supposed to have produced and sold 84,000 based on the budgeted proportion, but we produced and sold 88,000. That is good for us. Now that is why the second one is favorable. Now the difference between the two will be minus 28,287, and this leads to 56,574, and this will be favorable because the net of the two is a favorable variance. Now with that, guys, yeah, let me say thank you. I hope you are now clear with all of this question. Not that much a challenging question, otherwise for me it's one of the basic questions. Thank you for that. I will see you when I see you next time through my voice.